Okay, everybody, this is Brandon from Galaxy Dock Market, and I'm going to bring to you a very shocking trading strategy on restoration hardware. And this is an earnings review and analysis, and I'm going to show you how to trade this for a big gain. Okay, so here is the disclaimer. Pause it, read it. If you agree, please move forward. All right, so I do this for the betterment of all mankind. um, you guys know about our Williams Sonoma trade, and this is our consumer demand destruction trade. And we did 25 to 50x depending on where we got in, and we think that this will continue. And this was released on May 22nd at pre-market for the earnings. And I think we're going to have similar type of an event. Okay, now there is consumer demand destruction, and I keep talking about this in our x.com channel, and it is hashtag consumer demand destruction. And that will take you to all of the work that I've been doing over the last maybe 3 weeks of the times that we were on x.com. And, we're very lively and active there. But this consumer demand destruction is a play on stagflation that is going on. And there is that destruction of consumer demand in high-end luxury goods or consumer discretionary. Consequently, consumer discretionary sector is the one that is under fire. Yes, it is getting overstretched. Yes, it is getting oversold. But stocks tend to get more oversold, those that are weak. And I believe restoration hardware is going to be exactly that for a multitude of reasons. And I'm going to show you some shocking inside secrets, and that's you're not going to find anywhere else, and the insights that you'll gain from our research. Now, if you haven't done so, there is a significant things you can learn about this consumer demand destruction and how we arrived at WSM, which is Williams Sonoma, which is also another high-end cookware cooking company that basically sells very, very high-end, $700 pots and pans and $2,000 kitchen knives. Okay. And I'm not sure about you, but even if you're a millionaire, if you have money to dispose of in this environment, people are basically looking for assets that are going to be non-indexed to inflation, and they're going to be looking for non-depreciating assets, hard assets. Okay. If you don't know what that is, go to x.com and just go check on consumer demand destruction hashtag. Okay. So let's get right into it because, I'm gaining a reputation for being very thorough, but my videos are long, so I'm going to see if I can finish this under 20 minutes. However, I want to make sure that we understand we're thorough enough, okay? This 5/30/2024 is an estimate. For the first time, Restoration Hardware is not committal about their earnings. I mean, it's unconfirmed. And the anytime that we see those unconfirmed type of things is that there's some bad news associated with it, or they're just not ready to reveal whatever it is that they're about to reveal. This usually happens in a lot of the penny stocks or a lot of the obscure Chinese one. The one that I can remember that keeps burning us with these estimated date is Jinko Solar. Okay, and this is also the first time that Restoration Hardware has been non-committal or on their scheduled earnings release date. So take that with a grain of salt. However, they can't hide out forever, and I think I have an idea why they're doing that. So if you look over the last 2 quarters, from the Q4 to Q3, they've been missing their estimates, and really their Q4 has been very, very weak, which is really odd because this is the quarter that basically is where the shoppers are going out, and but this is telling you that the home industry, the home decor industry, and the high-end retailers are suffering. Okay. So basically what they did was they missed on their EPS, earnings per share, and they were also missing on their revenues. Okay. And we'll see some shocking results about that. Now, back in also March 29th, which I'm not going to really do a review of, is that they have missed on both of them. Now, from 9/7/2003, Q1 to Q2, has been pretty stellar. They've been beating earnings, okay? So their Q2 and Q1s are significantly good. But again, I said I'm going to show you some shocking revelations about how this stock trades. This is a tricky stock to trade, but if you can nail it, I think it'll do better than Williams Sonoma. Okay, so keep that in mind. Okay, so now type this up. So let's dig right into it. Okay, on the Q4 earnings after hours, they basically missed both the EPS and revenues. However, it gapped higher. And here's what it did. It gapped higher. And so for those that basically front ran this earnings on the gap up, I mean, it went from 295-ish all the way up to 355. And then it just crapped out over the next few days. If they miss earnings and revenues, be aware this company can say and do a lot of things because a lot of the street out there is not too big on this company. Okay. In fact, I would say that if the current conditions continue to deteriorate, this is one of those companies that you should be on the bankruptcy watch. Not yet, but it is something that you need to be aware of. So any type of bad news basically elevates the potential for some sort of a buyout or some sort of a strategic leverage on this company, and then that's why it bounces and then it just craps out. Okay, so this is the Q4 earnings report, which basically it did crap out after reporting bad earnings, but not before it popped. Be very careful. This is a tricky stock to trade. That's shocking, isn't it? Okay, let's look at Q3. They missed EPS and revenues. Okay, what happened? They gapped down. Okay, so here it paid to front run some of those earnings. Okay, and then if you didn't front run it, it still gave you a lot of meat on the bones, right? After all, the IV gets crushed around 252 down into about 238. Okay. So that's a sizable area that you can look into. However, it basically gapped down, and then over the next 3 days, it moved higher and then made a bull flag. Okay. So again, bad earnings. Yes, this time it gapped down, but again, it moved higher. Okay. Now, on the Q2, they beat earnings and they beat revenues. Okay. And what it did was on that beat, okay, they gapped down. Okay, and they sold off for 6 days. So it sells off on good earnings, and it basically does weird things around on bad earnings. And I believe the earnings are going to be pretty bad because when you look at where we are in terms of the Q2, and now we're entering into the Q1. Okay, they basically went on May 25th, announced after hours. Okay, this time, that time they kept their earnings schedule, folks. They beat EPS and revenue, and it gapped down on good earnings, and then it basically sold off again, gapped down, tried to recover a little bit in the first hour, and then it basically sold off hard. So again, I don't think there's any really need to basically front run this. And I think when you look at the IV percentage on Restoration Hardware, especially for May 31st expiration, it's tame. It's like 59%. So I think the market may be pricing in the fact that it may not be reporting earnings at the scheduled time. That's totally fine, folks. But you need to be aware of this. And if you want to front run it, it is gambling. Okay. But there is a modicum of if it does front run and it basically gaps and craps out, I do not believe it's going to pop. Okay. But that's why you want to wait. But if you are one of those people that are addicted to these pops and drops, then yeah, I don't think this is a bad idea as long as you've been making money in the stock market and you just treat it as such. Okay. I'm not advocating that. I think that there's plenty of market action available after earnings that's going to give you, I don't know, at the very least 10x. I believe on this one. Okay. So basically, it basically sells off on good earnings and then it recovers, right? Closes right near the top and then runs up higher. Okay. So, just be aware. Okay. Earnings beat and revenue beat, initial negative reaction and then a pop. When they miss on earnings, okay, it pops and then drops potentially. Okay, I do not think this stock is going to do very well this quarter around. It's going to be part of that whole consumer destruction theory. Okay, now I think there is still significant insider selling, not as bad. There's been selling. There's absolutely no insider buying in this situation, but there is $29 million sold. And here's the other shocking part that I'm going to show you. Not as shocking as Nvidia's, right? I mean, there's no senators and people involved, Congress people. But here is something that you do need to be aware of. Somebody sold, an insider named Eric Chaya. You're going to see that name pop up over and over again. Somebody's in a hurry to sell a lot of the shares here at near the top. Okay, this is significant because insiders are selling. The CFO sold about $10 million, and these are all occurring right here. This is 5/6/2024, right before the earnings, folks. And so those are usually warning signs. But the bigger warning sign that might be shocking you is that the short interest has not grown. Okay, now this is the trend that it's been declining, but for the first time, in this quarter, we see a little uptick in short interest. Okay, short interest really hasn't sold off, but this is a pretty healthy margin. 14.5% of the float sold short. Okay, it doesn't put you at the risk for this massive short squeeze if we're wrong. However, this is kind of where you want to be. I mean, it's like you don't want these, short interest above 30%. If you haven't noticed about in the past, shorting Tesla sometimes that can be a BITCH, right? So let's go over the technical analysis real quick. All right, so this is the daily and restoration hardware, okay? Again, I got to remind you, the 5:30 date is tentative, okay? For the first time, for whatever reason, they unconfirmed. The date is unconfirmed. However, the daily looks like a mixed bag. It's tricks, right? It's been selling off. RSI has popped up a little bit off of this descending trend line, but it can go right back down. Okay, it has like a phase 2 level, and so this area, this box that I'm talking about, those are the confluence of moving averages. When they're jumbled like this and pointing down, that is a bearish sign, folks. And so this is really key, this trend line right here. If it breaks above and goes higher, yeah, it can probably take out the 319 on the way high. Okay, that's pretty much my upside range. But on the downside, I mean, this thing will not stop until it gets down probably into the 190s as we get into the weekly analysis, okay? But really, we have this support level. We're kind of in that level, and this right now, where we are, it's going to continue to sell down. If the 240 does not hold, this thing's going to sell off hard, okay? The business conditions are not good. The MACD is continuing to show continued momentum into the sell side. CCI is trying to recover, but it's really, really weak, right? I mean, yes, there is some positive divergences here, but it's nothing that the bad earnings can't fix. But again, remember, forewarning you, if you're going to front run this, it can be lucrative, but you have to do it carefully, okay? And with money you can't afford to lose. The other thing, though, is stochastic is oversold, and it basically is ready to make a bullish cross, okay? Now, my favorite PPO ADX formation is that it has been bearish, but now we're beginning to form this. It's too early, but you got to be mindful that if it sells off, then now we're getting really stretched, and the PPO ADX will turn bullish, just like we did with Lulu. Okay, there's a little room to go on this one. And then, of course, accumulation distribution. People have been selling the crap out of this stock, folks. And not only that, I think there's a little bit more room to go down. And then once it goes higher, as you know, I use ATRs very differently. I use it as momentum and also directional change, in addition to looking at average true range of the move on the stock. Right now, it's stuck at 12.4. I believe there's about 20 to 30 points, maybe 50 points of move coming on the stock, okay? Now, let's look at the weekly. Weekly is terrible. I mean, it's bearish, right? RSI is trending lower. Here's the thing. There is a larger potential head and shoulders formation denoted by the yellow, okay? And then there is left side head and the right side head and shoulders. Within a head and shoulders, that is a very bearish sign. What this is telling you is that the stock is very, very weak. It tried to attempt to recover, and now it's just being met with insider selling and institutional selling. Okay, now the volume has gone down ahead of the earnings. Okay, but when we look at these phase 1, here's the phase 1, 2, and 3 on the down. We have one fourth phase, and then this trend line, this support and resistance line, if that should break, we're going all the way down to this 200-day moving average. I'm not saying in one day, but it is very possible that we start taking out this 220 to 197 area post earnings if it so decides to do it. Just be careful. This stock is weird. It tends to pop with bad earnings and it tends to drop with good earnings. Okay, let's look at some metrics. Okay, MACD looks terrible. Okay, it is bearish, but it is kind of biding its time before anything happens. Commodity channel index is coming down. There is a slight bullish divergence forming, but nothing significant. I believe it's going to get worse after the earnings. Stochastic is down. Now, when we look at this aspect right here, okay, this is PPO ADX, folks. All right, you see that formation right there? And we talked about it in the previous ones. This is what's taught in our course. This is bearish, folks. And I think there's a lot more room to go. The question is, are they going to report earnings on time? Okay. And is it going to basically pop first and then drop? Okay. Cases can be made on both sides, right? WSM on our trades, people have front ran that. Okay. But no problem. We just add it on the pop and then a drop. How many times have you heard me say that also? Okay. So that's kind of what we have. It is bearish on the weekly. Bearish, but with some divergences forming on daily, and that's normal for a stock, but it's not beaten down enough at this point. So in conclusion, what we have here is a situation where it's on the phase 3 impulse short setup, which is very good odds of it working out. They have a tendency to drop on good earnings and then pop on temporarily on bad earnings. Okay, this is part of our consumer demand destruction trade and play on consumer discretionary bear market play. Remember, we don't have to hit the strike price to make money in this situation if you buy enough time and you buy the premiums right. And this is what we teach in our membership community. And if you want to learn about us, we're going to have something for you at the end to learn about joining our membership. Earnings and business conditions are bad. Okay, so be aware also that this 530 earnings is tentative and unconfirmed. This is the first time this company has done this. So short interest is not at an extreme level, but it's rising and it's at the perfect point where it could give you a very good sell-off. Maybe it pops first and drops like WSM did. This is why I don't advocate front running it, but you may be rewarded based on how this stock reacts and how they report earnings. Insider selling is significant, even though it doesn't seem like much. And let's face it, man. In this economic environment, no one's going to be paying for these overpriced furniture, fixtures, that cost thousands of dollars. Okay, all right. You could go to Ace Hardware and go get some door hinges. Okay, there will be opportunities on both sides of the fence. Okay, what I mean by that is if you know your levels, we plan on fully taking advantage of the short side and the long side on this one. Okay, front running is gambling. But sometimes gambling pays off, okay? So this is one of those times it may be so, but don't do it with money you can't afford to lose, okay? I'm favoring May 31st and June 7th, maybe June 14th, 240 and 235. I'm also looking into potentially the June 14th looks also good, and I just started realizing that. June 14th, like $200 puts. Like I said, you don't have to hit the strike price. However, it is something that, it's up to everybody. It's not financial advice. This is what we're looking into, okay? Most people, however, should wait until after the earnings. There's a lot of meat on this bone. So, all right, so that concludes everything. Follow us at x.com, Galaxy.market. There's lots of good stuff there. I'm active there. Please like us, share this video. We're trying to grow our channel. Give us a thumbs up if you really appreciated it. And then, of course, subscribe, okay? Thank you. We are growing. And if you want to learn about working with us, click here. Coach Brandon at protonmail.com. And if you can't click it, type it. All right? Okay, let's go get some alpha.